Good morning, everyone. It is Friday, October 14th. Can you believe what happened yesterday? Ate up 3 days of price action, but the size of that candle is pretty darn massive. We look back here, maybe the size of like this 2-day move to the downside, maybe this 2-day move, but not the full ride down. What a move. We started out, and let's take a look at what actually happened yesterday. All right, here we go. So we had the CPI data out in the morning. Before that CPI data came out, on some UK news, we actually started making a little move up. We were up, a couple hundred points or so, or really close to it. And then the CPI data came out, and well, you know what? Let's just take a look at what that looked like yesterday. Here we go. We were cruising on up. CPI data came out, and we went from a level here around 360 all the way down to 349 into the 348 right at the open. Right, so this is where we hit. This is the opening bar right here, this little one. Kind of, it's a little hard to see. We hit this, put in a low at 348.11. 348, right in that area, was a monthly trend line too that we were kind of keeping an eye on. You don't see it in here now. I went ahead and took it out. But if we start heading back down, I'll put it back in. Just don't like too messy of charts. Anyway, all right, so this is what we look like when we came into the open. Huge bar down, right, on some pretty decent volume. Huge bar down. Here we go. Hit the lows quickly. Came up. We talked about, and I'm just going to go take this here. Right, we hit this, and we talked in this area. I'm like, okay, this could very well just be a short covering rally. Let's see what we do, even all the way up through about 11 o'clock. And then we took off. Look at this. We saw, when you see volume going up and the volume's decreasing, that is not a bullish sign. That's much more bearish. Doesn't mean necessarily it's going to turn around, but it's definitely throw a caution flag out there and say, you know what, something's not right. When you're moving up, when you want the move to continue in the direction in which it's moving, you want it to be doing it on volume. And it's the counter trend on lower volume that you would be looking for. So in this particular case, this turned out to be a bull flag. But what you would look for is volume, 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 decreasing volume, and then pick back up. Well, yesterday was just weird. There's no better way to describe it. We came in. We had a ton of selling early, and then, as I said, we took off. Yesterday, the SPY, during market hours, 147 million was the volume. Now, the last time we had that close to that volume and actually beat it just a smidgen was right back here on 9:30. Let me just double check that. I think that's when it was. Yep, 9:30. 154 million. Other than that, in the last 3 months, we have not hit those two marks. Now, why am I pointing that out? It does beg the question, when you see extra volume at the end, or at what could be an end after several candles in a certain direction. Doesn't matter if it's going up or down. In this case, it was going down, right? This was painful to sit through. Down, 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 down. We hit 154 million on the SPY on this down candle, and what happened? We came back up. Now, obviously, we didn't hold it, right? A lot of news in here, so I'm not saying that the move is over. I'm not saying that we're not in a bear trend. I'm saying we need to pay a little bit more attention to what happens now. Was this in here the best we're going to get for capitulation? So a couple things happened over the last couple of days that I thought was very interesting. We talked about on Wednesday that the VIX hadn't moved very much. It hadn't given us the kind of, it wasn't ticking up maybe as we thought it should. And by we, I guess me, I shouldn't speak for anyone else. But it just seemed a little bit odd. There was no buying. The advanced decline stayed very low. So I'm not saying that. But yesterday, we came in and took our nice leg up. And the VIX didn't actually drop a whole ton. we are still hovering right around 32. So those things are they set off a little caution flag and tell us, pay attention, something's going on in the market. Now, volatility, high volatility, we think of capitulation hitting over 40 at a minimum, maybe even 50. During the pandemic, I think we went up to like 80 on the VIX, which is the first time I had seen that as an active day trader. But then hitting that 38 earlier this year in June. These were things that were like, something that, that this is something big. But typically, capitulation comes at the end of a big move, and then
Good morning,
we have
everyone.
a reversal, a trend reversal. So we didn't really see that, and we've talked in the room quite a bit about, well, is it because people, it doesn't matter which news channel you turn on any news channel, and you're going to hear the words recession in the next 6 to 9 months. Jamie Dimon just came out, and of course, they reported this morning. Jamie Dimon just came out this past week and said, we probably have 20% more to the downside. So all this fear is already out there, right? Everybody's, it's a done deal. We're going to go into a recession. And I'm not saying we're not. I'm saying it's not the typical recession that we've seen before, because the rotation hasn't been quite the same. Our labor market, we're coming out of this very peculiar pandemic area that market, everything's just off. And the Fed has put so much stimulus into the market that now that they're trying to bleed it out, do you need the capitulation that looks like a slash where you hit the jugular and all of a sudden it's done quickly? Or has this been the slow bleed? Many hedge funds, large institutional money has drawn out of the growth sector over the last several months. And because tech is such a big part of our market, and that's obviously the growth, it does beg the question, will capitulation look very different? And I know Joe and I talked a little bit in the chat room yesterday about capitulation just being this long, drawn out, orderly, very orderly selling. And we don't know. We won't know until we look back a few months from now, or maybe even a year from now. But it's something that I think, mark it on your calendar, mark yesterday on your calendar and say, hey, was this the day where we start putting in a new base and then start to move up? Now, a lot of other economic data that's going to come out between now and 6 months from now, right? The Fed is going to continue to tighten. That's another thing. The Fed, they said that they expected CPI to inflation still be very high, and that's why they are firm on a 75 basis point rate hike. Now there's talk about it maybe being 100 basis points. I don't know. I think the Fed just wants to stay very measured, but they've surprised me before. But obviously, I think we can expect at a minimum a 75 basis point coming up on the November 2nd meeting, a rate announcement. So they meet on the 1st and 2nd of November. And then, funny, because that week is the same week we will get the next round of data for the labor report. So, a lot coming on. Anyway, take a note of what has happened here. It is something that's pretty remarkable. It's I would say it's amazing time to be a day trader, or be a trader, active trader, maybe not even just a day trader, but an active trader, and see what is actually happening in the markets, all this jockeying around. I did say this morning, the earnings season has officially kicked off. We always use the big banks as the kickoff, although there's always earnings going on. Very rarely will you get a day in the market where there's not some kind of an earning report. But the big banks kick it off, and over the next few weeks, we are going to get pretty much everybody in the S&P 500, 80% or so of the S&P 500 reporting, and of course, those really big names that we're going to be watching, our Microsofts, our Googles, our Meta, Amazon, Netflix, all of those will be reporting here in the next few weeks. Big banks knocked it out this morning. JP Morgan, so Jamie Dimon, did report, and they beat. Interesting. They and WFC, so Wells Fargo, both increased their forward guidance for this year, their fiscal year targets. So our Dow has come back a bit here as I've been talking. We are right at the break-even line. Citigroup, it looks like maybe Citigroup missed because they went red. But overall, the banks have reported pretty, don't forget, they're looking at interest rates and things like that. So they're going to be able to capitalize money in other ways. But I don't want this video to get too long. Because of this big move, almost everything looks super extended. I went into the overnight session without anything simply because, that was such a big move. Taking a big old breath this morning would make sense, and we had those bank earnings coming out. So we're seeing this big move in a lot of stocks. So let a 15-minute ORB play out. Maybe look for a reversal, something that didn't reverse yesterday. Look at that, see what it's doing. Watch and see if it sets up for a long or a short play. I wouldn't put any bias on the market today. I've heard plenty of people say, well, with that big, we have to see it continue today. Otherwise, it's going to be failed. Well, we don't know it's failed until it's failed. It hasn't done that yet. But I've also heard a lot of people say, well, it does deserve a break today. Sure, it could. Don't allow that bias to infiltrate how you look at a trade. Don't get one way or the other, okay? Allow the chart to tell you what it's doing and then follow its lead. You're the dance partner. You're not the leading partner in this dance that you do with the market. But we see a lot of these candles here that are eating up price action. Apple actually pushed right up into its gap. A lot of these charts did this. So keep a good eye on it. And remember, maybe going into the weekend, because of the big move that we've had, maybe go a little bit lighter. Okay, that is it for me this morning. I will look for some nice trades. We had a beautiful trade in CVX. Energy started out yesterday when the market was really getting beat up. Energy was the strong area. That was the strong sector, and that's why I looked there to take that trade, and I took about 56% out of CVX yesterday. That is not normal, right? Normally I take part at 10 and then usually the rest at 15 or 20. But it was so strong. There was no sell signal there. Watch for those plays. Play them. Don't get sucked into, well, it went red, I don't want to take a loss. Take the smaller loss and go find a new play. Look for the strong sectors. Okay, overall for the month, tech and utilities are still kind of the weaker. Tech, obviously, the weaker sector. So look for maybe some continuation follow through there. But I really encourage, stick to a day trade or a smaller position size going into the weekend. If you have any questions, reach out. Heather C. at GivingTreeTrading.com.